Imagine a quiet Tuesday morning. You're sipping your coffee, scrolling through the news, and you see it. The headline that sends a jolt straight through you. The one you've been waiting for, praying for. For years, the Iraqi Dinar and Vietnamese dong have officially revalued. In that single, heart-stopping moment, everything changes. The paper wealth you've been holding, often mocked by mainstream financial advisors, is now a tangible, life-altering asset. But then a cold, hard question crashes into your euphoria. What now? How do you, sitting in the United States, actually convert those dinars or dong into spendable US dollars? The journey from that headline to a bank deposit is the most critical, misunderstood, and perilous part of this entire investment, and today we are pulling back the curtain completely. The process is not as simple as walking into your local branch with a suitcase of foreign currency. It is a meticulously choreographed financial ballet involving federal protocols, intense verification, and a window of opportunity that could close faster than you think. We have built this information from a ground-up analysis of existing U.S. banking regulations, International Monetary Fund guidelines, and the logistical realities of a mass currency event, creating an original data-based roadmap for you, the holder. The first and most crucial step will be the announcement itself. A legitimate revaluation will not be announced through shady gurus or obscure forums, but through official channels like the Central Bank of Iraq, the State Bank of Vietnam, and will be swiftly confirmed by major global financial news networks like Reuters and Bloomberg. Your first action must be verification from these primary sources to avoid the tsunami of misinformation and scams that will inevitably follow. Once confirmed, the clock starts ticking. Your immediate destination will not be your personal bank teller. It will be a pre-identified authorized financial institution. Not every bank is equipped or legally permitted to handle such a large-scale exotic currency exchange. The primary players will be the top-tier commercial banks with dedicated international departments, such as Bank of America, Wells Fargo or JP Morgan Chase, and crucially, the Federal Reserve Bank itself, which may act as the central clearinghouse to ensure stability. Your very first phone call should be to the Treasury Services Department of one of these institutions to schedule a formal, private appointment. Attempting a walk-in exchange for what could be hundreds of thousands or millions of dollars will lead to immediate red flags, frozen transactions, and potentially having your assets seized while you are investigated for money laundering. The appointment is your shield. It legitimizes your transaction before it even begins. When you call, you will likely be screened by a senior treasury specialist who will ask preliminary questions: the approximate volume of currency you hold, the denominations, and how you acquired it. This is not the time for secrecy or vague answers. Having a clear, concise, and truthful narrative about your investment is paramount. They will then schedule your appointment, likely at a main regional branch or a designated high-net-worth client center, often with heightened security and privacy measures in place. This initial triage is designed to separate the prepared from the panicked, to ensure that when the day arrives, the machinery of exchange can operate smoothly. Your preparation for this appointment is what will ultimately define your success or failure in navigating this historic financial event, and it begins days, even weeks, before that fateful headline ever breaks. The day of your appointment arrives, and as you walk into the secure, often sterile-looking financial center, the theoretical becomes intensely real. This is the moment where your paper certificates and banknotes are transformed into recognized wealth. And the procedures enacted here are designed with one overarching, non-negotiable principle in mind: absolute security and regulatory compliance. You will be ushered into a private room, a world away from the public teller lines, where you will meet not with a single banker, but likely a small team comprising a senior international treasury manager, a compliance officer, and possibly a legal representative, a clear indication that this is far from a routine transaction. The first physical step is the presentation and verification of your currency. This is not a simple count. Specialists will meticulously examine every single note you present, using advanced spectral scanners and counterfeit detection systems that go far beyond the simple marker tests used for casual foreign exchange. They are authenticating the specific security threads, watermarks, and color-shifting inks unique to the newly revalued dinar or dong, comparing them against the updated. real-time security templates provided to them by the Federal Reserve, which has, in this scenario, received them directly from the Central Bank of Iraq or the State Bank of Vietnam. This rigorous process is to ensure that no pre-revaluation forgeries or decommissioned series enter the U.S. financial system, a safeguard that protects the integrity of the entire revaluation event. While this physical audit is underway, a parallel and equally critical process begins: the financial and identity verification, a layer of scrutiny that will feel more like a high-level background check than a bank transaction. You will be required to present a suite of original documents, including government-issued photo identification, your social security card and proof of address. But the most pivotal document will be the one that traces the origin of your currency holdings. This is where your meticulously maintained records become your greatest asset. You must provide a clear, defensible paper trail demonstrating how you acquired the dinar or dong, which could include original purchase receipts from authorized dealers, bank wire transfer records, or customs declaration forms if you physically transported the currency into the country. The absence of this provenance is the single biggest point of failure for holders. Without it, the bank's compliance department, operating under the stringent protocols of the Bank Secrecy Act and USA Patriot Act, will flag your transaction as a potential money laundering operation and will be legally obligated to file a suspicious activity report, effectively freezing your assets and involving federal agencies like FinCEN. Assuming your documentation is in order, the next and most anxiously awaited step is the official rate confirmation. The exchange rate applied to your currency will not be a number. The local branch manager looks up on a screen. It will be a formal locked-in rate transmitted to authorized institutions from the Federal Reserve, which itself is based on the official floating rate established in the international currency markets post-revaluation, a rate that will be incredibly volatile in the first hours and days. The Treasury manager will receive this rate, often with a specific timestamp, and will present you with a formal exchange agreement that outlines the exact rate you are receiving, the total US dollar amount you will be paid, and any applicable fees, which could be a flat transaction fee or a small percentage of the total, deducted from the final sum. This agreement is a binding contract, and signing it locks in your transaction, moving the process from verification to the final logistical stage of wealth transfer. A transition that happens within the confines of that secure room, separating those who prepared their documentation from those who will face debilitating and costly delays. With the exchange agreement signed, the final, transformative phase of the process begins: the actual movement of your new capital into the United States financial ecosystem, a procedure governed by a different set of rules focused on stability and reporting. The bank will not hand you a suitcase of cash. Such a notion is the stuff of movies and would violate a host of federal cash reporting requirements. Instead, the established US dollar sum after the deduction of any agreed-upon fees will be electronically wired into a designated account. This could be a new high-value account you open on the spot, with the institution facilitating the exchange, or it could be sent to a pre-existing account you hold at another US bank, provided you supplied the correct routing and account numbers during the appointment. This wire transfer is not instantaneous. Given the monumental sums and security checks involved, it may take several business days to fully clear and become available, during which time the funds are essentially in a verified limbo between the Federal Reserve and your personal bank. The moment that wire is initiated, another critical federal protocol is triggered: the Currency Transaction Report. For any transaction exceeding $10,000, which this certainly will, the bank is mandated by law to file a CTR with the Internal Revenue Service and FinCEN. This is not an accusation of wrongdoing. It is a standard procedure for large-scale movements of money, creating a paper trail for tax authorities. This is the moment your financial life changes irrevocably, and it brings with it the absolute, non-negotiable necessity of professional guidance. The influx of such a massive amount of capital in a single tax year places you in the highest tax bracket, and the profit from your currency exchange is treated as a capital gain by the IRS. You are now staring down a significant tax liability, potentially amounting to 37% or more of your net gain, and navigating this requires an immediate team, a certified public accountant, specializing in high-net-worth individuals and a reputable financial advisor. Their first task will be to explore legal strategies to minimize your tax burden, which could include structuring the gain across multiple tax years if the exchange process allows, making maximum contributions to tax-advantaged retirement accounts, or establishing charitable trusts. But the key is that this planning must happen swiftly, ideally before the tax year ends. This new wealth also fundamentally reshapes your risk profile, making you a target for scams, frivolous lawsuits, and so-called friends emerging from the woodwork. Therefore, alongside your financial and tax advisors, consulting with an estate planning attorney to create a robust structure, such as a revocable trust or a series of LLCs, to shield your assets and dictate their distribution according to your wishes, becomes not just a wise move, but a critical one for your long-term security and peace of mind. The entire journey from that shocking headline to this moment of secured wealth is a testament to your patience as an investor. But the next chapter demands a different skill set: disciplined stewardship. The euphoria of success can lead to impulsive, life-altering decisions, but the true challenge lies not in acquiring wealth, but in preserving and growing it responsibly for generations to come. And now here is your most important call to action. This video has provided you with a detailed original roadmap, but knowledge without action is meaningless. If you have not already done so, you must immediately gather every single piece of paper, every receipt, every bank statement related to your purchase of dinar or dong, and place them in a secure, fireproof location. This is your foundational step. Then in the comments below, I want you to answer this one question. What is the single biggest point of confusion you still have about this process? By sharing this, you not only get clarity for yourself, but you help this entire community of holders learn and prepare together. And finally, the most crucial step you can take right now is to subscribe to this channel and hit the notification bell. In the event of a revaluation, information will be chaotic and unreliable. This channel will be your source for clear, immediate, and actionable steps to ensure you navigate the process correctly and securely. Your journey has required immense patience. Securing your future requires immediate and informed action. Take that action now.